Right. Good afternoon. It's Hannah Perkey, CEO of Evelo team here with Bob Woerner, and we're here to give you guys your monthly market update on what's happening in the real estate market here in Central Indiana. So we pull data from August and share that every month in a quick snapshot. Because we know that's a common question. People ask us, we just talked at meeting yesterday. People always are like, what's happening? How are interest rates? So we're going to give you all those answers today. So you'll have those. So Bob, I'll kick off with just give us a general overview of what happened in the local housing market in August.
Perfect. Let's just kick right to it. So first slide up that we normally go over is that median sales price. For the month ending August, we were at 295. That was down just a tinge from previous month, but that is up 5.4% year over year. So kind of in line with what we were expecting this year. Next up is that cumulative days on market. You'll see two different things on this graph. So the 10 is the actual median days on market. So the median days on market was 10 days. That's still obviously really low. I say all the time when I first started, we were above 100. So to go from 100 to 10 in 10 years is pretty remarkable.
Mm-hmm.
So that is up ever so slightly from last year and from last month. And then the second trend line, again, 10 being the median, the average was 30. So different property types, different locations, et cetera, that can impact the average a little bit more than the median. Next up is that month supply of inventory. So again, a balanced market being about a 4 to 6 month supply of inventory. We've creeped back up over 1% for the last few months, which was the first time that had happened in a long time. So August, we ended at 1.5 months. That was basically the same as July, but that is up from 1.2 months in August of 2022. And then that last one we kind of take a look at under this first umbrella is the percent of list price received. So we are starting to see that number dwindle. It doesn't mean over list price and multiple offer situations have gone away entirely. They are very situational dependent, price point dependent, but as a whole in our local board of realtors area, we ended the month at 98.8%.
Yeah. It's great data too. I mean, I think those are some of the conversations we've been having with sellers too of, we've come out of this very crazy seller's market, still a seller's market, but it does look different than 12 and 24 months ago. So it's good to have those pieces of data to know how's your listing performing in regards to what the market's doing. Great.
Absolutely.
All right. So what about metrics we've been following to track that shift in the market? What are you looking at?
Yeah, so the couple or three things that we added since the market started to, feel a little different, probably around this time last year, we started targeting a few other metrics to track. First one is that active inventory. So again, if we look back here where this graph starts in 2016, our active inventory was about 10,500, right? Then right before the pandemic, we usually floated between 5,000 and 6,000. And now here we are with another month of below 5,000 homes in active inventory. So that still proves to be our biggest problem. It's just a shortage of inventory, and that's kind of what creates most of the market conditions we have. That was up a little bit from last month, but that is down over year. Then next up is kind of the crazy graph, which always follows that spike. I always tell people the real estate year looks a little bit like a roller coaster. You go up a hill, you get to the peak, and then you go down and have some peaks and valleys. So that's our total closed sales for August, just under 3,100 units. That was up ever so slightly from the previous month. But another dwindling number as inventory dwindles. That means there's less homes to close each month. So that was down about 18.6% year over year. And then the last one under this category, again, just to keep track of new listings. So the new listings that came on the market in August was 3,700. That was up some over July, which was kind of interesting, but that is down about 10% over last year.
Okay. Great information. Thank you for sharing that. All right. So probably the most common question that I feel like we field as real estate agents is what are interest rates? So Bob, tell us where interest rates are currently.
Right. And of course, keep in mind that there's many factors that go into the interest rate that you might receive. So we just kind of look at Freddie Mac puts out just kind of a synopsis every week for what the average rate is across the country. So for the week ending last week, We were at 7.18% for a 30, 6.51 for a 15-year fixed. That's up about 0.22% from when we did this last month. So you can see like the peaks and valleys here. We just keep doing these little up a 0.1, down 0.1, up a 0.1, down 0.1. We've pretty consistently been in the high sixes and low sevens this year. It's a little hard, obviously, to try to predict where they may land long term, but I think it's safe to say for the foreseeable future, we're definitely in the 7-ish range, right? For a while. So if there's been any thought about sitting on the sideline, kind of keep in mind two things. Interest rates can either stay the same, they can go up, or they can go down, right? And so if they go down, you can always refinance, which is an option. So I would just say, don't let that be the sole factor for why you may be staying on the sidelines.
Absolutely. Great. Okay. So wrap us up. Any final thoughts, any summary items that we should hear from you?
Yeah, I kind of took a different approach this month. Whenever I sit down at an appointment, I often say I don't have a crystal ball more than anyone else does, right? I think that we can, as real estate professionals, especially ones that are pretty experienced, most of us now have a decade or close to a decade or more than a decade of experience on the Evelo team in many cases, and we can kind of spot these things a little bit before they happen and predict where things are going. But admittedly, that's hard to look a year or more in advance. So this was just something I came across, just a quick summary. It's basically all these major, people that were suggesting what the forecast was going to be for 2023 back in December of 2022. And you can see that everyone had a forecast that was in a negative situation in terms of median home prices. Would they go up or down in 2023? Some were anticipating that would even go down 15 to 20%. Several more in like the 2 to 5% range. And as you can see, now where the forecast is and where reality is, it's exactly the opposite of that, right? So this one that forecasted negative 15 to 20 is now forecasting the year to end at 6. If you recall from one of the slides I showed earlier, we're up about 5.8% locally in our market. So we're kind of right there in that 6 range. So it just goes to show, right? It's a little bit too hard to predict more than a few months in advance, but we're always happy to have that conversation. And we can kind of speak to the near term, but there's so many factors that impact pricing and interest rates and things like that, that it's hard to predict much more than a couple or 3 months in advance.
Yeah. I love that. It's really interesting. All right. Well, we hope that was helpful. We try to keep it in 10 to 15 minutes so you can get all of that data and go on with your day. So we appreciate you joining today. We'll be back next month to tell you what's new. And in the meantime, let us know if you have any questions about real estate that we can answer. You can comment here or reach out to us at info@eveloteam.com, or you can call or text 317-863-9011. Thanks so much and have a great rest of the day. Bye-bye.